Hey everybody, my name is Brandon from thestockstreams.com, and today I want to talk about NIO stock, ticker symbol NIO. What I want to do first is I want to go into Google so that I can try to explain my point of view on why I think NIO has dropped 15% from the highs that it made in late November. And then I want to go into the earnings report so that we can see how the company is doing overall. And then we can head on over to the trading charts so that we can find a place to buy NIO if we want to buy NIO. So let's get started. So here we are in Google, and here's a 6-month look at NIO stock. And as you can see here, since it's reached its all-time high about a month ago, it's been trading down around 16%. And ever since it traded down to this key support level here on December 1st, we've kind of been trading in the range between $40 and $50. So why is NIO waving out in this range? Well, of course, there's never just one single reason, but the main reason why I think it's waving out in this range, because, well, similar to XPeng stock, we really had a nice run in a short amount of time. So since here, let's call it 100% in a month. So that's fantastic if you were along for the ride, but not so much if you missed the boat. So what happened was there was a frenzy and parabolic phase here. As with some exciting companies, here the buyers, mostly retail investors, kind of bid up the stock, and then we had some nice gains so that the FOMO investors came in because they saw that their friends were making money, so they wanted to make money as well, and then that bid up the stock price as well, all the way to nosebleed valuations here. And then I think sometime around here, people started to believe that valuations actually do matter, so some reality set in and the stock began consolidating in this range that we see here. So I actually think that trading in the range and consolidation is actually good for a stock like this because it allows people who haven't gotten into the stock a chance to get in at more fairer valuations and a chance for people who have made a lot of money in the stock to consider stepping out of the stock. So in the last section of the video, we're going to take a look at a more detailed stock chart to see if we can find a nice entry point to invest into NIO if we want to invest into NIO. But again, I really want to be here to tell you the boring stuff, like valuations actually do matter for a company. So let's take a look at what NIO is worth overall, which is this market cap number here. So as we can see, NIO is worth a whopping 72.5 billion United States dollars. And that's just today's valuation. In order to get back to the highs that we saw in late November, this would be 72.5 billion plus about 15% to get to the valuation here. To put that into perspective, that's a bigger valuation than Ford, GM, and Honda. GM alone sold more than 1 million cars in Q3, while when we look at the earnings report, NIO only sold about 12,000 cars in the same period of time. Also, these three traditional automakers are beginning to branch into the EV space, so we'll look into the earnings report to try and see if NIO deserves this premium valuation, but throughout the video, I really want you to keep asking yourself this question. Why does NIO deserve a $72.5 billion market cap when GM's market cap is $59 billion, Honda is at $51 billion, and Ford is at $34 billion? If you have a good reason, please put it in the comments below, and hopefully you can tell me what I'm overlooking, but man, is NIO a hard sell for me at this price. So, even though I'm sounding like a little negative Nancy here, I actually quite like what I'm seeing with the fundamentals of NIO. So when we look into the earnings report, we'll see really good growth rates and really, really good controlling of costs. So now we're going to jump into the earnings report so that I can show you guys the numbers of what I'm talking about. So here we are on NIO's balance sheet, and I have to say that NIO does do a very good job displaying the information here. If you want to follow along, I'll link this sheet in the description below, and if I ever do a tutorial video on how to read a balance sheet in the future, I'll probably use NIO's balance sheet. So here, as we scroll down, they really give a quick overview on car deliveries, which just gives you a quick idea about the company's growth rate quarter over quarter and year over year. As we scroll further down here, they give kind of like an easy mode balance sheet here on page 2, which basically is just a quick summary about the revenues and expenses, and then the hard mode balance sheet down here on page 9. So this is the hard mode balance sheet. So when we're talking about the costs and expenses that NIO is incurring, we really want to look at the hard mode balance sheet because this splits it up line by line to see where exactly NIO's money is going. So let's begin with the easy mode balance sheet first, because Well, it's easier, and they already calculated the quarter-over-quarter and year-over-year percentages, so I don't have to do it. But then when we discuss the cost of operations, then we'll head back down to this hard mode balance sheet because, like I said, to really understand the cost that NEO is incurring, we really have to look at a more in-depth view of what exactly is going on. So let's begin here with the easy mode balance sheet. So here is the most recent quarter, 2020 quarter 3. And then this column is showing a quarter-over-quarter view, and this column is showing a year-over-year view. So as always, let's start by seeing how much money NEO is bringing into the business through total revenues, which is this line here. As we see, NEO is making more than 4.5 billion RMB this quarter, which is actually up nicely quarter-over-quarter and year-over-year. We see that we have 21.7 quarter-over-quarter growth and 146% year-over-year growth, which is definitely pretty good to say the least. This is showing very good growth for the company, and again, like I said about XPeng's company, it is really amazing how quickly these Chinese companies can churn out growth rates like this. But that's not even the most impressive part. Let's take a look at the gross margins here. So gross margins is this line on the balance sheet, and gross margins is basically how much you profit from a sale. So this current quarter, we got 12.9% margins, whereas quarter-over-quarter, we only got 8% margins, and just a year ago, we were losing 12% on every car we sold. So that is very impressive margins growth. So here they tell it in bips, which is basically basis points. So I'll just put a little calculation up on the screen so you guys know what is happening here. But the main point here is just look how far we've come. A year ago, we were losing 12% on every car we sold, but now we're gaining almost 13% on every car we sell. So even with the scale up of sales by 146% year over year, we were able to turn a positive gross margin at nearly 13%. That is absolutely extraordinary and really is showing NEO's ability to operate efficiently here. This is exactly what you want to see as an investor, and this is definitely exciting if you want to invest in NEO. So let's get an overview of the costs from the easy mode balance sheet first here before we see how NEO is managing costs line by line in the hard mode balance sheet. So as we can see here, loss from operations, which is this line on the balance sheet here, is actually decreasing quarter over quarter and year over year by 18 and negative 60% respectively. So what that means is that our costs are actually shrinking. Again, this lowering of costs is exactly what you want to see as an investor. We want the companies that we invest in to keep costs down so that they can have more money to invest with, and that's exactly what NEO is doing. So to see what NEO is actually spending money on in its operating expenses, we need to mosey on down to the hard mode balance sheet here. So the hard mode balance sheet is on page 8 of the report here, and this column here is now the most recent quarter. This column is the quarter over quarter view, and this column on the left hand side is the year over year view. So we've already covered the revenues here, so we don't have to go through it again. So now let's just look at the operating expenses, which is this line here. The main point that I want to show you is that we are reducing expenses year over year from this current quarter. So a year ago, we were spending over $1 billion in research and development, and now we're spending $590 million. Before, we were spending $1 billion and some change on SG&A, selling general and administrative, and now we've cut that costs down a little bit to $940 million. So it's not just the year-over-year reduction of costs that's impressive, it's also the quarter-over-quarter. So we see that it's up slightly from last quarter, but it's basically stable, and stability is really the important part here. So of course, this hard work in cutting costs flows all the way down to the loss of operations, which is this line here. So this current quarter, we are losing 945 million RMB, a little less than 1 billion RMB, while a year ago, we were losing 2.5 billion RMB. So think about that for a second. Just think about cutting your expenses in half in just a single year. To me, even though we are still seeing this net loss from NEO, that's actually okay with me because it looks like they are actually accelerating the controlling of costs while they are increasing margins. So as kind of like a tangent, if we remember what we saw in XPeng's video, we saw that even though they were turning a nice gross profit, they were still accelerating costs. But here, NIO is controlling costs, which tells me that NIO actually may turn a profit sooner than the other EV companies out there, and that is making NIO look like a very well-run business and maybe even an investable business as well. So now that we've got the boring earnings report out of the way, let's jump into the stock chart to see if we can find a place to buy NIO if we want to buy NIO. So as you can see here, we really had a strong day today, closing with a gain of about 4%. So this blue line here is the 50-day moving average. We can see that we nearly touched this level before bouncing straight up from it. So honestly, some traders do give a lot of weight to this 50-day moving average, but I personally like finding support and resistance levels in the stock chart instead, because I think that the levels are a more accurate representation of the equilibrium, and that helps me feel like I can predict the stock better. Now, as always, this is just a technical indicator, so nothing's really hardcore science here, but it's really just a way for investors to feel comfortable predicting future price action based on past trends that we've seen. If we look here, I see a nice support level around this $40 mark and a nice resistance level around $48 to $50 here. So as always, it's up to you if you want to step into NIO, but if I wanted a short-term trade position or a long-term hold position, I like to put my money at the bottom of a range. So in this case, it would be around this $40 mark because I'm cheap and I like to save myself a couple percentage points. So of course, because we had a nice strong close today, if we have another couple days of strong price action, then we could see NIO break out of this $40 to $50 range and keep climbing the ladder upwards. Now, just to cover the major indicators, the MACD chart here is just a measure of momentum, and you can see that this blue line is kind of flattening out. So if this blue line crosses this orange line, then that would be a very bullish sign for a breakout for NIO. If you want to learn more about it, I'll put a link in the description to a blog post that I wrote explaining this indicator. And lastly, this is the RSI chart here, or Relative Strength Index, and it's kind of hanging out around 50 here. You kind of see it's turning upwards, but if it's between, let's say, 20 and 70, then it's not really telling me anything. So, what would I do with NIO? It definitely does carry some risk because it is a new company and it is still losing money and the valuation is very, very rich. But, I really do like the growth and how it's controlling costs here. So, I'm not sure. I think if NIO falls to around $40 at the bottom of this range here, then I may open up a short-term trading position or a long-term holding position. But if it breaks out from this $40 to $50 range and goes higher, then I may have missed the boat and would probably wait for a better entry point. So that was my review on NIO stock. Let me know what you thought about it in the comment section down below. If you have any questions or if you caught any mistakes, also leave me a comment below. If you liked the video, please like the video, and if you haven't subscribed yet, please subscribe. And as always, thanks for watching, and I hope you have a great day.